Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the modern market. That is crypto, NFTs, stocks, and anything else related to how to make money on the internet. Loaded up for discussion today. We have the discussion around the Federal Reserve Chair, Jerome Powell, calling out the president, saying that the only reason he has criminal charges being pressed against him is as a consequence of the Fed not reducing interest rates. So we'll discuss real escalation here in Fed politics. We'll talk gold moving, metals are moving higher. Gold's up 2%, silver's up 5%. Bitcoin is more or less flat. And then finally, A16Z raised $15 billion across American dynamism, apps, bio and health, infrastructure growth. That is 18% of all VC dollars that were allocated in the US in 2025. There's got to be something to reflect on there. So we'll touch on that during the course of today's show as well. And just sneakily, there's been some increased meme coin activity, a little bit of risk coming back into the market. We'll touch on that too. During the course of today's show, delighted to say I've got Legendary and Phunky in the co-host seats with me today. We are ready to get into it. But just a reminder, friends, before we do, nothing that we ever say is financial advice. The market is very, very risky. We do not know anything for sure. So please do proceed with caution and exercise your own judgment. With that out of the way, it is Monday. It's the 12th of January. Legendary, how are you doing? How are you feeling?
Jim, doing quite good. Pretty interesting weekend, pretty interesting day in the market. I feel it's going to be probably the core bit before the interview in the show today to try to make sense of what is going on. And I think kind of also revisiting the good article, which you had in one show last week on Ray Dalio, that it's going to be a good year to be an asset holder, which I think it is. And I think that the market is pretty open to all kinds of assets, which is why we are seeing what we are seeing on the market, with stocks being essentially at all-time high, but so being gold, so being silver, and many other things, while the dollar is weakening against other currencies, and trying to paint this big picture together and also see the potential implications for our portfolios is going to be an interesting one today.
Yeah, big discussion today to have on all of those things. Glad you mentioned as well, because not just a normal show today, we do have an interview with OSF joining towards the end of today's show. We've got the usual show, then we've got the interview with Ovi, obviously intelligent investor, smart trader, founder of Rekt Drinks. Rekt Coin sitting over 100 mil FDV, selling over 1 million cans in their first year. Pretty outstanding achievements. Looking forward to talk to Ovi a little bit later in today's show. I think this is his third time on the show with us, so stay tuned for that conversation in just a little bit. Before we get there, Phunky, before we get to the main stuff, Phunky, welcome not just to the stage today, onto the video camera. Welcome to the show again. How are you doing? How are you feeling, my man?
GM guys, love it. Always a pleasure to be here and happy to co-host the show today with you. Had a great weekend. I was just as surprised to wake up and see the J Powell video as probably everybody else in America. So looking forward to having that conversation today. There's some other interesting things happening for just the political landscape here in the US, as I put on the US political correspondent hat, which maybe we'll touch on today, but I'm sure we'll certainly be talking points later this week as the Senate starts to do the markup of the Clarity Act.
I think that would be excellent context, or to give us the backdrop against which some of all of this stuff is happening. So let's get into that in a little bit. But let's go straight into it then, guys. Got a lot to discuss. Got an interesting interview today as well. So let's get everyone up to speed on everything they need to know, starting with the price action. Starting off with the majors, we've got Bitcoin flat, $90.6 thousand. ETH is also flat, 3.1K. XRP is down a couple of percent to $2. BNB is down a percent to 899. We got Sol up a couple of percent to 139. We have, let's find Hyperliquid here. Hype is down a percent to 20. Oh, dipped beneath 24 into the $23 region. Sui's down a percent as well to $1.79. Two big shout outs on the coin side. Zcash up a couple of percent to back over 400. But also Monero, the other privacy coin, up 17% to over $577. So big move in Monero. You might have noticed that it specifically didn't receive a shout out, but one of Chamath's big 2026 predictions was instead of a new privacy coin, a crypto-related privacy coin becoming big and desired in 2026, something that is not ETH, something that is not Bitcoin, none of the ones that already exist already. I don't know if that was specifically for what this is behind this move, but we've been talking about privacy for a while now. It's got some prominent supporters. Getting into the rest of the big movers, white whale is actually down 20%. Went up a humongous amount, went up to almost 200 mil FTV, down to 140 mil FTV now. You've got Doge down a couple of percent. You've got Pepe down a couple, Trump down a couple, Pengu's flat more or less, Bonk down a couple as well. SPX is down a couple as well. Filecoin's down a couple. Everything's just down a couple. Everything's down a couple more or less. On the meme coin side of things, white whale being the biggest mover is down the most, still up 77% on the week. So that's what's happening there. Getting into the news itself, as mentioned today, we're going to talk about Federal Reserve Chair Jerome Powell saying the White House threat of criminal charges is a consequence of the Fed not reducing interest rates and following the president's preferences. So it's got nothing to do with whatever renovations that he is allegedly doing or not doing, or did disclose or did not disclose. Big statement coming out there calling the president out. In asset moves, gold has moved up another 2% to almost 4.6K, silver's up 5% to $84. And then finally, A16Z raised $15 billion for their next fund across a variety of areas, which is 18% of all VC dollars allocated in the US in 2025. I thought that was very, very notable, so worth touching on today. Story Protocol is also up 25% to $2.56. Spoke about the other coins that I mentioned there. Some notable sales on NFTs. Some things were specifically moving. Chimpers are up 27% to a 0.7 ETH floor. Know the guys at Chimpers have been working very, very hard over the years with maybe less kind of forced hype than other teams. Really, really worked hard. So good to see that. Good Vibes Club had his sale at 5.25 ETH. Azuki Spirits over 28 ETH. CryptoPunk floor is sitting at around 91K, so not as high as the recent 100K floor that it has seen. In other news, Rain announces $250 million Series C raise at almost $2 billion valuation to expand stablecoin services. A lot of, I think Rain powers a lot of these kind of new crypto cards at the moment, so that's why they're so valuable. Vitalik writes a long-form post on X on how decentralized stablecoins are important, but still face key issues. Tether, I think this is important news. Tether freezes $182 million in USDT in connection with a law enforcement operation. This happened on Tron, and I believe it's the largest freezing action in some time. So important to note, and maybe I don't know if that was connected to Vitalik's article or not, but even if you're holding stables on chain, does not mean that they are permissionless. And finally, Pump Fund changes creator fee system, including creator fee sharing, to try to prevent repetitive low-risk coin creation. I had seen recently that there's a number of people who just keep, or allegedly prominent traders who have allegedly just been producing loads and loads of coins and rinsing and repeating. So, and rugging things. That's what I've heard. And that seems to be maybe, well, at least partly why that activity had gone down, although it does look to be coming back a little bit now. So that's the roundup, guys, to get us up to speed with everything that you need to know from the last, from the weekend or such. We've clearly got some bigger headlines to get to today, the very big news being the Jerome Powell news. But before we get there, let's see what is catching our attention from around the space. Maybe coming to you first, Phunky. Before we get to the main headlines, which we'll get to in a sec, we've got these other bits of news around decentralized stablecoins, Tether freeze and cash, Rains raise, Pump Fund. Anything catching your attention or anything else we've missed that you think is important?
Just the one thing that I alluded to briefly when I started my comments, that over the weekend, what was happening in Washington, D.C. was that the banking committee, the Senate Banking Committee, was looking at the first drafts of the the Clarity Act, which is going to provide the market structure and eliminate a lot of the challenges that we face in this industry. And there's a lot of consternation happening right now behind the scenes, because the first full official read through and markup will happen, I believe, this week on the 15th, if I'm not mistaken. So why this is important is because there's an amendment that's being put forth by, I can't remember the senator's name, and it's called the All Good Amendment, All's Good, whatever the name of the senator is. effectively saying that they're going to change something that happened in the Genius Act. And this is really, really important because it will take some of the biggest reasons to use, especially for businesses and others, to use stablecoins. Because as it works through the Genius Act, in a nutshell, if the issuers themselves cannot give interest to the end user. However, third parties are allowed to do so. So let's say you're a company or a corporation, whatever it may be, and you're holding stable coins in your balance sheet. Maybe you want to pass on some of that yield to the end users who are holding the stables. You can do so. The ABA, or the American Bankers Association, is talking about deposit flight away from banks because then people are going to want to move to stables. They're talking about it as if it's some existential threat. Make no mistake, this is the banking industry doing what it does. It's stifling financial innovation, and it's trying to just further entrench itself in our lives. And so the amendment right now is effectively passing because both Democrats and Republicans want the Clarity Act to pass. So the overall big bill will likely pass, which is great news for the industry. However, it sets back a lot of the sort of financial innovation that would be very pro-consumer. There's been a lot of great threads on this. So that's top of mind for me. And maybe we'll talk more about it later in the week as we see more of this become part of the headline news with the Clarity Act.
Interesting. That's, I mean, in some ways, that is the banks trying to fight back against, as you say, capital flight. Users will want to go where they earn the most yield. But you said it's already passing, Phunky. So what's the specific issue here?
Just that the amendment itself is being accepted by both Democrats and Republicans because they feel that they need to just continue to let clarity move forward, and this is the one thing that's stopping it. Because what happens
so the amendment to not allow people to pass yield through is going to go through.
It seems as if that's the case, and people are just screaming their head off about it because Genius, this is the crazy part, Genius already prohibits this. There's no need for this amendment. But because there is the freedom for those third parties to then pass on yield to the end user, that's what they're trying to stymie because they don't want that. They just feel like everybody's going to migrate to stable coins. At the end of the day, it's just banks just being resistant to technology and knowing that their competitive moat is being eroded by financial innovation, especially in the tech space.
Yeah, I mean, it's definitely a problem. I guess what will happen, and maybe this is, everyone is too lazy, basically, and that's what they're banking on. Because what will happen for people who are just a little bit less lazy is be like, okay, cool, you know, Coinbase aren't allowed to give me the yield. Someone else isn't allowed to give me the yield. I'll just take the stable coins then and put it in Jupiter. I'll just take the stable coins and put it in Athena. I'll just take it and put it in Aave. But obviously, most people will clearly not do that because they've been letting their money sit in banks for however long anyway and not earn anything. So you can see why it's not in the user's interest to allow that to pass through because people will be lazy and then not see that return come back to them.
Yeah, imagine if you just held the stables and you saw that yield accruing directly into your balance. That's what they're trying to prohibit, right? Because most people, to your point, especially those who are new to this, they're not going to go looking for DeFi protocols. They don't understand.
No, exactly.
Yeah.
And the big innovation would be like, okay, cool, you've got this new like Neo Bank stablecoin card. And I mean, I'm pretty sure Aave, the way that they've designed the app is that it's going to tell you how much you're going to earn because it's always going to just be lending without you even thinking about it. So in essence, that would be trying to obstruct something like that, right? Because that's clearly a better product than what already exists. Yeah. Interesting stuff. That's really cool. Interesting to know that context. We'll have to keep an eye on how that progresses. Ledge, what about you on your side? What is catching your attention before we get into the main stuff?
Yeah, I definitely want to touch on Vitalik's article, but before I do that, I want to hear from Axi, who has his hand up to get his thoughts on the Clarity Act discussion that we just had.
Let's do it.
Yeah, just really quick jumping in on that. So Alexander Grieve had a really interesting article or like thread about this as well, and I think there was one aspect of it where you could distribute the yield if it was based on like swipes, for instance, like credit card points. So like if you spent X amount of dollars, you could get it in cash back, and that was you earning your yield on those stables that you had spent. It's a really, I mean, it's like Phunky said, it feels like a very convoluted change that they're trying to push through. One question I did have was, so obviously there's this move towards stablecoins issuers giving the yield back to the holders of the stablecoins. I'm curious, like, so a lot of people think that as the stablecoin industry becomes more competitive, these stablecoin issuers are going to continue to give back the yield to the holders of the stablecoin. But in the situation like a Circle or any stablecoin issuer, that's their sole revenue producing aspect. I mean, that's their entire revenue model, right? That the yield that they earn on your stablecoins that's the entire revenue model. I'm curious why the idea is that everything's going to move towards these stablecoin issuers giving all of their revenue back to the users and the holders. Where's the revenue going to come from at that point? Is it transaction fees? Because I think we're moving away from that as well. I'm just curious, Phunky, maybe you've thought about this as well. Is like, why would Circle, whose only revenue comes from yield from these stablecoins, give it all back to the users?
Genius already precludes issuers themselves from giving the yield to the user. So this would be more of a, let's say you're a company that has other revenue streams and you're holding stable coins on your balance sheet. You want to incentivize people to use stables and you're going to pay them. So it's more like the companies, we had this whole conversation previously on Coffee with Captain, like this whole idea of people holding stable coins so that third party then can have the yield and then give that back as a sort of a way to induce people to continue to do business with the company or whatever. So it's very similar to what you're pointing out with Alexander Grieve in that thread, using sort of this cash back model. But he points out the math is insane. Like if you had $10,000, you'd have to spend $22,500 to get back your like $400. So this is it's the whole process, I think, is getting lost in the sauce with what the ABA is trying to accomplish with this amendment. And this is why I'm just saying people should probably keep an eye on it, because it is a setback. There's no need. At the end of the day, Genius already clearly states what you can and can't do as an issuer. And this is why people are screaming their heads off about the ABA getting involved, like the American Bankers Association, because they're trying to make sure that no one can pass on yield. And so you're still having to go to the bank and earn your 0.1% by holding your savings there.
Interesting stuff. Appreciate the question, Oxy. And thanks for the additional context, Funk. Ledge, what did you want to talk on before we get to the main stuff today?
Absolutely. I thought that Vitalik's article was quite an interesting one. It's, as you said, pretty lengthy. There's like 3 problems that he's pointing out with decentralized stablecoins, which TradingView summarized in a very nice article. So the first problem is actually the one which we've been talking about on the show for quite some time, which is that 95% of stablecoins, according to CoinGecko, that is, are being pegged to the US dollar. And he is basically, Vitalik, asking the question on a 20-year timeline, what if it hyperinflates even moderately? You don't want to have that dependency on a single nation state as a basically or essentially still single source of failure for a stablecoin. That is the first issue that he sees. A really quick second issue relating to oracles, that they need to be strong enough to resist manipulation attacks without protocols raising costs for users or artificially inflating token prices. Third issue is that the staking returns need to remain high without destabilizing collateral or discouraging use. But that's exactly the first one, which I wanted to go back, the argument that everything is depending on the US dollar. I'm wondering, in my ideal future, if crypto is to make it even more out of the space where it started and become a more dominant force in TradFi, if we'll see a stable coin which is pegged by BTC, if that is enough for decentralization, or if that essentially carries the same risk as being pegged by the US dollar, because it's still a single network. So if we then go into the direction that we need to have the algorithmic stable coins, which are basically using self-governing mechanisms to a certain extent, Ethena is doing that as well, which then again, in my opinion, has the downside that's pretty hard to understand for users who are not familiar with that, because I think it's pretty easy to grasp the concept of what Tether is doing, of what USDC is doing, by saying $1 is 1 USDC, 1 Tether is being backed by $1. So I think it's going to be very challenging to strike that balance between what is a sufficiently decentralized stablecoin, but also a product offering that people can easily understand if they wanted to.
Yeah, it's interesting. I mean, personally, and I don't want to spend too much time on this because we've got some other important stuff to chat about. We've got 20 minutes before the interview today, but I actually think it's a bit of a red herring talking about stablecoins in this way because if you want a stablecoin, you're implicitly saying that you want it to be pegged to the dollar. Like, like I'm pretty sure the whole point of something being stable, because crypto is not stable, is that it's somehow supposed to represent a dollar in some way. So that's kind of one of my issues with all of it. And then the second issue is the dollar is no longer stable. So if the dollar is not going to be this stable, kind of what's the point in creating the dollar stable coin? And the thing that we spoke about this a lot last year, when you started buying gold and we started talking about getting on-chain gold, and we've been buying that for a while and adding to that position for some time. I don't think people are that sophisticated with getting exposure to metals on chain, for example. Like I know you can go long and short on certain protocols, but you can just buy on-chain gold. So to the extent that you're looking for a stable coin, may I offer you a stable rock, which you can buy on chain? You don't need to worry about all the physical stuff. Obviously, you've got trust assumptions either via Paxos or either via Tether. Those are the two main people at the moment who seem to be offering an on-chain option. But there you go. There's your stablecoin. Buy gold on chain. Like I'm not sure what else you're supposed to do. That's my opinion anyway. But guys, let's get into, because I really want to get into this Federal Reserve Powell stuff. This was pretty huge news coming out yesterday, made the internet kind of go crazy over it. Pretty unprecedented for a chairman of the Fed to come out and call out the president in this way. Just what do we need to know here? What happened, firstly, and why is it important, and what do you think happens next?
Absolutely. So maybe to set the scene and paint some additional color, the tensions between Jay Powell and Trump in his second administration have been very, very high. Obviously, the White House did put a lot of pressure on the Fed cutting rates. Trump has done numerous posts on Truth Social saying Jay Powell is Mr. Too Late, is not cutting, is not helping with saving and saving the American economy, making America great again. There's also been this infamous clip, which we had discussed on the show a couple months ago, I think that was, where both Jay Powell and Trump were looking at the renovation of the historical Fed building, where Trump already started to say that funds have been misappropriated. There's been overspending on that happening. And so there was already this undertone, this pressure of seeing if there's some sort of nefarious activity or criminal conduct that Trump can label. So this pressure has been ongoing. And Jay Powell has been pretty calm and quiet about that. But this now is the video which we're sharing on screen, at least is still from it, is the big exception to that. So basically, he made a 2-minute statement where he said that he served under 4 administrations, Democrat, Republican, didn't matter, did not have political bias, or did not try to be influenced by day-to-day politics, but just trying to serve the country and do what the Fed's mission is, which is to make sure that employment rates are high, inflation is in a controlled range. And he then very explicitly said that the threat of criminal charges is a consequence of the Fed setting rates based on our best assessments of what will serve the public, rather than following the preferences of the president. So directly calling out Trump, which, as you said correctly before, B, did make the internet went viral on CT and outside of CT, with many people having some thoughts and comments on that. First of which coming from Krugman, saying that he thinks that Powell's done a superb job dealing with what is an almost impossible situation, bringing down inflation without plunging the US into a recession. Some other voices, including Blockwork, said that this is a political game which is being played by Trump, where he basically wants to ensure that once the new chair is nominated, that Powell doesn't stay as a governor for the rest of his term. So basically, the way that it works is that obviously he's the Fed chair, but when that term comes to an end, he still would be one of the 7 governors, I think, that is in the Fed until 2028. And they are trying to make his life living hell, so that he does not want to be or stay a governor for another 2.5-ish years. And this is why this escalation is continuing to basically pressure him out of that role, so that once there is a new chair, the Fed is more White House or Trump aligned and does not have Jay Powell as a critical voice in there anymore.
On post his stepping down as chair is maybe the additional detail some people may have missed. Phunky, US correspondent here, what's your view on the situation, and do you have a view on this kind of on Powell's ongoing involvement in the Fed? Do you think this was a kind of sign that he's saying, look, guys, I'm standing up to you. Do not expect me to leave when my chairmanship ends?
I mean, I find it interesting. I didn't know that piece until you guys just brought it up. But at the end of the day, I think it's much ado about nothing. He's on his way out, right? I mean, he's got 4 months left in his term. I think it's May is when he's supposed to step down as chair. So, this is, I think at the end of the day, is not going to make a big difference. I do think it's interesting that he wants to stay on the Federal Reserve Board. I mean, it's just so he can be a dissenting voice, because what's ultimately going to happen, whoever he chooses, whether it's Hazard or whoever Trump, they want to put in there as the Fed chair, we're going to see something that is not unprecedented. And that's probably the most important point, because he makes it sound as if there's been no point at which the Fed was not independent. And that is not correct, because after World War II was the predecessor to this moment in history where the Fed and the White House worked together to set that monetary policy, because they knew that they were trying to bring America out of the post-World War II, and became a boom. This economic boom that happened was something that was unlike any other point in history, because all the manufacturing bases across Europe and elsewhere had been destroyed. So people had to turn to America to buy goods. We're going to see something very similar, I think, when he steps down. Even if he is a dissenting voice, ultimately it's going to be about them trying to just run the economy very hot and continue to allow things to expand, and that way it's just keeping ahead of whatever inflation exists. So I think it's going to be curious to see how markets react to this today, but I don't think it'll be much of anything.
So you actually don't think the market's going to react hugely then? One of the things I was thinking is that, I mean, gold has moved up, as we noted already. So it feels like kind of hard assets have already decided what direction they want to go in as these types of things continue to happen. I feel like the stock market itself is a bit more nervous because it's already so high, because of what people feel to be some type of AI capex bubble. Are people willing to continue to bid US equities when you can tell like the foundation of the US political system is, I would not say it's collapsing by any means, but there are cracks which people would not have expected to appear, because those things had kind of been enshrined for a long period of time. The Fed is supposed to be independent. Everyone knows they're independent. You're not supposed to really go after them in this specific way. And I think the view maybe is that Trump is feeling quite emboldened post Venezuela after that operation was executed so flawlessly. And so now, do you want to bid? Are you supposed to bid US equities into this kind of political, strange, maybe disarray environment? Given how weak it's displaying, given the weakness it's demonstrating about the US, or do you bid it harder because it means they're going to run it hot, as you said, and they're going to just kind of throw caution to the wind and go for it? Do you have a view there, Phunky?
Bid it harder. What other choice do you have at the end of the day, right? I mean, if assets are just going to climb the wall of worry, knowing that the DXY is going to continue to fall in strength and lose relevancy across other global currencies, this is why, getting back to the previous point about stablecoins, they're trying to preserve that dollar hegemony across the globe and locking people in that regard. So I think that, yes, metals are going to be the safest play, right? That's already demonstrated itself. But at the end of the day, this is just debasement. And that's what people are just banking on, pun intended, I guess. But, just in the sense, I think I can't see a world in which people would stop going risk on in an environment like this, knowing that this kind of political fight, right? We know where this train is going.
Yeah, I know you mentioned so I'm hearing some echo from somewhere. I'm not sure. You kind of alluded to maybe pre-show, Phunky, that you don't think this would be like a big sign. I've been saying it for maybe a week or so that it feels like I want to bid something again. I did buy some more gold just before the show. I feel like I'm holding way too many dollars. Like after what I felt was like a very nice trajectory of de-risking over the summer, where crypto assets specifically were too hot. I have bought some equities over the last few weeks, and I just feel like I'm holding too many dollars, and I'm trying to figure out which way that goes. Obviously, I've been speaking about energy, been speaking about metals, been speaking about defense. That's where I am thinking the most. Legendary, it's probably best to bring you in here now. You're going to maybe talk to some of the asset prices moving and how you're thinking about it at the moment.
Yeah, absolutely. Let me maybe smoothly transition that into the second headline and then give a broader answer to that. Both of you have mentioned precious metals. Gold, silver are on the run. Gold is up to almost 4.6K. Silver is currently trading at $84, which means that silver is up 5%. Gold is up almost 1.7%. Again, unprecedented performance that is at least for the last decades. Zooming out over the last 6 months for silver, that means it doubled a bit more than actually doubled up 108%. Gold is also up 35% on the time frame. I think what we also have started to see with silver is this price gap between international markets. It was just last week. Silver was trading for $120 an ounce in Japan on the one hand. On the other hand, physical silver is trading at a massive premium as well. I tried to find some prices for 1 kilogram bar of silver across Europe, across the US as well. You can often see premiums as high as 40 to 50%. Now, it's not unusual to see silver carrying a premium, especially when you buy bullion versus just buying the thing as an ETF. But that premium is extremely high. Typically, silver is, when you mine it, it's not really being found as a isolated metal. It often comes in an alloy. And all of that does matter if you want to buy that thing as a bar, because it needs to be purified. It doesn't matter as much for industrial production. And the thing that I want to add to that is, because we're talking about like currency debasement, the popularity of products like this, let me bring it up on screen, is also increasing and is on the rise. It is ETCs, exchange traded commodities like that X-Tracker is physical silver, which is hedged against the euro. You have products like that hedged for BTC, hedged against the euro as well. So you basically try to get silver's performance, try to get gold, BTC's performance, whatever you want to buy, and is hedged against the currency that you're denominating in. Can be euro, can be whatever other currency. Obviously, the difference there is that it comes at a rather expensive TR, total expense ratio, that is of, in this case, 75 bips a year, but you are taking the bet that silver is going up and you want to hedge against the dollar going down and eating into your performance. So there's definitely interesting products to watch like that. However, one other thing to add, staying on the precious metals and on the physical ones, the other reason why silver is seeing such a premium, gold is seeing such a premium as well, is that in many countries you have a tax advantage if you buy physical silver, if you buy physical gold. Many countries have some sort of time frame. A lot of countries in Europe, that is 1 year. You hold that, you sell it, you go tax free, and that does typically not apply to exchange traded commodities, even if they are physically physically holding that silver and physically replicating ETCs instead of like optimized sampling. You still don't have the tax advantage. Typically, you have to pay capital gains on that. So that's one more thing to know and understand that notion here. Taking a quick look at Poly Market to see what's going on that side of things. We have the market for will silver hit insert price by end of January, 2 million in volume, almost on that Poly Market. 61% chance, so a bit more than a coin flip to see $90 for a silver price. Less confidence that we're going to see $100 over the next 19 days, only a 20% chance for that. Very similar market for gold, albeit with little volume compared to the silver market in there. And here we can see almost a coin flip, 46% chance. Market is thinking that we might see 4.7K until the end of the month. Moving away from the precious metals for one more quick thing, which is the pre-markets to see the stock side of things. S&P was down a bit on Friday. Pre-markets are down significantly. Again, that is coming out of the weekend. Lower volume on the pre-markets and the spot markets, but still we see S&P futures being down 55 base points, NASDAQ down 80 base points, and Dow futures being down 70 bips. And because we talked so much about the dollar and other currencies, I also, as the last thing, want to revisit the chart, which we have been looking at multiple times throughout the last year, but haven't had on this year, which is the Dixie, which is the dollar indexed against a basket of other currencies. And that is down over the last year, 9.5%, which is, again, a very significant movement for that. And with this rising gold and all the things that we've seen in the stock market today, it took quite a steep dive down today, being down almost 0.4%.
Ledge, what do you think in terms of your mix of going into 2026? Metals being one of the things that everyone is talking about more so than anyone else. How much exposure are you looking for to metals? Do you share that same sentiment that I was expressing earlier? Just even though I'm trying to reduce the number of dollars that I'm holding, and there may be some bigger things that I'm going to do that I'm kind of saving the dollars for at the moment in life, which I know I've allocated to go in this particular direction. They're not like dollars, just need to get rid of them. But do you share that sentiment at the moment, and what are you doing about it?
Yeah, I do share the sentiment, and I'm happy to add more to my gold bags. Silver, I have bought some. Silver is hard to get a longer term read on, I would argue, because we obviously see the double demand. Silver is going up because gold is going up, but silver is also going up because there is this second order AI bubble demand by just being a metal that is being used in semiconductors and so many other things. And it just takes time to ramp up the production capacity. Like, there is silver on this planet, but there's typically like a, 12-ish months lag is what many people are saying to ramp up those production capacities. So I don't know when the ramping up started and when we'll see more silver supply hitting the markets. So this is why I'm not happy to aggressively stack more silver. I'm happy to hold the bags that I have and at some point take profits. But for the gold side of things, I'm more than happy to add to that. And also because I brought up this euro hedged, and as someone who is denominating in euro hedged products, I don't like them too much because in my case, and again, that's a very individual thing, our cap gains is 27.5%. So basically for the thing, and my holding period for it to be tax-free is 1 year. So for me, if I were to buy the ETC, the bet that I would express is that the dollar is dumping more than 27.5% this year against the euro, which I just don't think it will. Might go lower, but not as low. So for me, on this 1 year plus horizon, it's still the better thing to buy the physical gold. But again, that is very, very different depending on each individual's tax situation and regulation.
Phunky, give us a take here, a quick one on, because we've got one more headline to do before hopefully Ovi is joining us from Rekt in just a moment to talk about their latest launch and how things have been going with them. Quick take on Bitcoin here. Isn't this the moment for Bitcoin? Should it not be the moment for Bitcoin? It's been stuck around 90K. You are a big Bitcoin maxi. What's your view here?
I mean, it is the moment for Bitcoin, right? At the end of the day, this is when you look at how, if it were correlated to other markets, and a lot of people are saying on-chain value should be somewhere between the range of 165 to 215K, right? I think this is where we expected it to go had 1010 not happened. And, I know we have one last headline, but we're going to bring in Ovi, but just look at what A16Z did, right? I mean, they're raising whatever it was, 15 billion or something crazy like that. And I think we're going to see game on as soon as the Clarity Act passes. This is something that I think all the big players are waiting for, because once we get this last piece in place, wash trading disappears, all the things that sexes do, like so many things will provide. There's a reason it's called clarity. And I think it's going to be that moment where, to quote Wayne's World, game on. And we're just going to see the markets come ripping back, because they're going to get just clearance from the US government saying, crypto is here to stay. Here's the rules you need to play by. This is the playbook. And I think we're going to see a massive surge in a lot of these assets, especially because this is just, everything else is risk on. Can't see it playing out any other way.
Okay, let's see. It's Bitcoin's moment in that respect. A16Z, final headline before we get to our interview with Ovi, which is coming up in just a second. Just a quick one. A16Z have raised $15 billion across a number of verticals: American Dynamism, 1.176, apps, bio and health, infrastructure, growth, which is 18% of all venture capital dollars allocated in the United States in 2025. A humongous amount being raised by one specific entity being entrusted to deliver on the American dream. And I think that's kind of how they articulated it in this article that they shared. They speak about investing in giving everyone a shot. It means an equally fair shot ultimately resulted in no one getting a shot at all. It means that you have a chance to create opportunities for yourself and for others. It talks a lot about the United States, all the opportunity that's been afforded by the United States, and taking a lot of the responsibility to continue the United States' tradition of being the best place to take advantage of new opportunities in the future. I thought it was super important just to be aware, specifically of the proportion, actually, 18% of all venture dollars now coming from this one specific entity. We've spoken a lot about how, maybe a part of crypto was about decentralization, and now the world seems to be trending towards a re-centralization, whether that's in specific domains with Russia taking more land than it is maybe supposed to, China having its eyes on more stuff, America now having eyes on more land and resources as well. So there's this re-centralization taking place on the country level. And I think it's also taking place on the capital allocation side as well. So something to take a note of, because I think that is interesting. Ledge, just a quick reflection from you here on that, as we say bye to Phunky. Thank you for joining us, man. We'll see you on the show tomorrow. Ledge, quick reflection here before we get into the interview with OSF.
Yeah, I really got two quick thoughts here. 18% of the entire venture capital dollars is a very, very impressive figure. B, I just love it how VCs paint themselves in this like altruistic light. The best thing we can do is to give back to society by investing in early stage vehicles. It's just like saying the best thing I can do for society is to invest in the stock market, because in theory it is the best tool to redistribute capital in a fair way. And I just like this framing. It makes me chuckle every time I read it.
It is a good one. It's a good framing. But yeah, I think they stand to make a lot of money probably as well. And I wouldn't be surprised, in the same way that you're looking for governments, you're looking for companies that are government backed, like we've been talking about Intel, and how the 10%, was it a 10% stake that they took in Intel has doubled in the time they do it. I wouldn't be surprised if this becomes like, it becomes so structurally important that so much of American capital is being invested via this specific company, that it almost becomes the de facto one that needs to win as part of the centralization in that process. So I'm intrigued from that perspective. So I definitely want to keep an eye on which companies they allocate towards. But look, that is a conversation for another time. I'm glad that it's on people's radars. Let's get into the conversation with Ovi today. I want to welcome to the stage again, OSF, third time on the show, intelligent investor, smart trader, talented artist, and founder of Rekt Drinks. Of course, selling over 1 million cans of different flavored sparkling waters in its first year of operation, whilst the accompanying Rekt coin sits comfortably at a market cap over $100 million at the moment. Third time on the show, Ovi, welcome back. How you doing, man? You're on mute. Just got to press the red button in front of you and you'll be good.
Classic.
Classic.
Absolutely classic.
Three out of three guests we've had so far in this new format. We need to be clearer. That's our fault. It's our fault.
That's all good. That's all. Yeah, I thought I was going to automatically get unmuted, but I guess I should have checked. Yeah, thanks for having me. It's good to be back.
Good to have you, man. How have things been since? So you've been. I think this is the third time on the show with us. A lot's changed. I think maybe last time you came on was around the summer. Potentially, we're in a bit of a mania back then. How are you kind of taking stock at the moment as we kind of move into 2026?
Yeah, I still think I'm not as skeptical on crypto as what I feel like most people that I know are. And I don't necessarily believe in this 4-year cycle stuff. So I actually think this year is probably going to be a big year. I think May, when Powell steps down, obviously there's been some headline or some funny media around that today. But I think when Powell steps down in May, and as we approach that, we're very clearly obviously going to get someone in who's much more dovish. And I think this year we will see a lot of rate cuts, which I think will really cause a big rally in risk assets across the board, which I think will include crypto. Now, crypto massively underperformed all risk assets last year. And it feels like we're back in this mode of like, everyone's like, oh, crypto's dead, crypto's useless, no one's going to use crypto around the world, et cetera, et cetera. And I think it's important to differentiate that something can go up in price even if it is useless. And we've seen that with meme coins. So I'm not sitting here thinking, yes, like, you know, the 69 L1s we have out there are going to significantly change the world, and the 1,000 L2s we have out there are going to change the world even more. I definitely don't believe that. Don't get me wrong, but it doesn't mean things can't rally. It doesn't mean you can't have a big risk on moment for crypto again. And I think we will see that this year, driven largely by rate cuts, but also, you know, it doesn't take that much capital to get these things to go a lot higher. I think people don't forget that. So I'm definitely very much on the bullish end of the spectrum this year for Bitcoin, majors, and you know, pockets of the altcoin market.
What do you think? One of the reasons I started to get bearish in the summer was I always try to think through like the marginal buyer, and we kept talking about how this cycle so far has been like an institutional cycle or something, and we kind of had all the DATs, like all the DATs that could have bought. We went from the top with the Bitcoin ones, and then we had the ETH ones, we had the Sol ones, we had the Avalanche ones, and kind of went down the risk curve via DATs. And then when we were kind of getting towards the end of it, I was thinking, well, who else is here? It felt like retail either went broke or are broke just because of how bad inflation was, maybe from 2025 and the year before. Didn't really feel like we had more retail participants. Felt like institutional money had run out. And so two-part question. Do you think that rebuying of stuff that should happen with rate cuts, is it a retail inspired one? Is it an institutional inspired one? Is it a bit of both? Do you think about it in that way at all?
The thing I think that's important to understand about crypto is it's a tiny asset class, right? The total market cap of crypto is small. Is it still smaller than Amazon? I don't know. Probably is, right? So it's a tiny asset class. It does not take that much capital to swing it in either direction. You just need a few people to get together and realize that's what they want to do. And that holds true all the way up to Bitcoin, right? Bitcoin is just dominated by whales who own a shitload of it that they've owned since it started. So the reason why we had such a big underperformance is because we had a lot of Bitcoin whale selling under the 4-year cycle narrative, and that in turn had a cascading effect for the rest of the market. Like the market still follows Bitcoin, generally speaking. So the retail component of it, or even the institutional component of it to an extent, it all generally just follows momentum, right? So if people start making money, if Bitcoin goes back above 100K and a few meme coins kick off and people start making money again, that's when you see retail come in. Retail are never going to come in and buy the dip, right? And it's also the same thing on an institutional level, because for DATs, for example, these guys are out there raising capital, and they're raising capital for people who are looking to dip down the risk curve. Again, in that instance, it's usually people who are jumping onto momentum and bandwagons, just instead of it being you or I with our a few $100, it's a Middle Eastern pension fund or whatever it is, with their billions of dollars. So what I think kickstarts this move is not really about the marginal buyer. It's not about like who's going to buy it now. Like don't get me wrong. I mean, trust me, anyone will buy something if it catches fire and has momentum, regardless of the underlying fundamental reason. It's not actually even really, for me, important what the tech does, because I think crypto has proven time and time again it's an asset class that will stay purely for speculation, if nothing else. And we've been through this now for 15 years. So my guess is what happens is, and call me a conspiracy theorist, but this is the way I think things work in the world, is you'll start seeing rate cuts, stocks will stay strong, and you'll have this huge underperformance of crypto versus stocks, and then it's going to be like, okay, cool, like the big boys in the room, how is there a narrative here we can push to get crypto going again, and we're all going to put in a bit of capital? All that Bitcoin we sold last year, let's all pile it back in. It starts going, it starts changing, and then people who look at charts will see the momentum, etc., shift, and then start pushing out these narratives. Oh, hey, let's give Donald Trump a call and get him to start, doing some shit. You know what I mean? And then the narrative and the story changes, and you've kickstarted that movement, and then retail comes in, then institutions come in, right? So that's the way I think things work, and I think we're at the beginning of that process. If you consider Bitcoin whale activity as the thing that starts and finishes that, these little cycles, basically.
Interesting. Okay. That's really, really helpful. I think a lot of people have been very confused by the way the cycle's played out, specifically confused about how some of these indicators that previously people like to see, like, Bitcoin versus gold or Bitcoin versus the money supply, and these things have broken down. And I think maybe the asset class isn't mature enough to just rely on these things blindly. But I think there's a lot of merit in what you're suggesting there. Let's move it into Rekt. So that's the market view. You've achieved like a ton of stuff on Rekt in the last year as well. You achieved, I think it was your objective. I don't know how early into the year you said that it would be your objective that you'd sell 1 million drinks. You did that, different flavors, sparkling waters. You've partnered with people like Binance, Abstract, Base, and today's launch that you'll be launching a little bit later today is with WorldStar. What are you, when you're looking back, what are you attributing to these numbers and success?
I think it's the combination of a few things. I think people really underestimate how strong our community is. Now, this is like the 5th year of our community in crypto, which is a long time in crypto, and we've just grown stronger every year. So I think people in our community really support everything that we do. They're out there buying these drops. They're shilling Rekt Drinks to all their friends, family, etc. And it's really been I think the cornerstone of our success. The second thing, and Rekt was actually within the top 30 best performing coins last year of the top 500. We actually ended the year up 30% when everything was down 90%. So part of that, I think, is due to the success that we've had and the things that we've achieved, but also people are looking for coins to hold outside of Bitcoin to, make generational wealth on, as we like to call it. And time again, we've seen teams rug, teams step away. And it's even the case of like doxed people with, a real platform will just rug something or stop working on something and walk away. And I think people really struggle to find something where it's like, hey, I can buy this project or this coin and really be like, I can underwrite this for the next 5 or 10 years without having to think about it or worry about it, or at least without having to worry that these guys aren't going to rug or step away. And it sounds so trivial, but it really is. A lot of people will say it's like 60, 70, 80% of the battle. And I think for us, we've proven that over time because we've been around for 5 years. The community's been around for 5 years, and we've never stepped away from anything that I've never stepped away from anything that I've worked on ever in my life. And I think I've now proven that within the crypto space. And we've had our ups and downs. We've had moments where it's been tough and I could have just thrown the towel in and walked away, or, I've had good trades where I've made money on other things and I could just walk away and say, I'm happy to get rich and just leave everything I'm working on. But I haven't done that. And I think we've proven each time that every time we have a setback, we actually bounce back stronger, and people are starting to believe into that story and buy into it. So part of what we do is, we now have this drinks brand, we sell drinks and people can earn Rekt coin from it. And it works in such an amazing way because people actually want to buy the drinks. Since we put the drinks back in stock without rewards, we've we sell drinks every single day, and the average order per person is something like $200. So we're actually making pretty decent money from just selling drinks without rewards. So people actually like it. Tells me people like the product. Now it's like, okay, you can buy these drinks that you actually like, and you can like claim Rekt coin from it, which over the course of the last year people have made a ton of money on. Why wouldn't anyone do that, especially if you're a supporter of what we're doing and you're in the community? So there's a few different things that I think have worked well for us, and we did really well in a really tough market last year, and I'm very confident of what we have coming up this year, which will allow us to outperform again. I'm not really worried about it being a tough market. I kind of almost low-key prefer it because it allows us to stand out versus other people. If you have a shit hot market, we'll all make loads of money, but we'll kind of get lost in the noise a little bit. Whereas if it's a bear market, which I don't think it is, but we can really stand out, and that's where we've done well in the past. So, I think it's just like people realize that this is a multi-year story, and it has been a multi-year story to date, and there's a lot more to come, and I think that's driven our success.
I was going to ask about that. You said you're not worried about the market. What do you worry about then? Because the question I had prepared was, do you feel like you're correlated to the crypto market still? Are you worried about IRL competitors? I know you've established this. So I think you can actually buy the drinks now IRL in the States. So like, what are some of the logistics here? What are the things you're worried about? What are the competitive landscape? If it isn't the market, because maybe you're kind of growing out of the crypto market to some degree, what's the insight there?
The market definitely helps. Like if the market goes up a lot from here, there's a lot more things we can do, and pretty cool stuff I think we could do. But we don't need the market. We're not relying on the market. I think the important thing to realize here is we're making revenues outside of crypto related drops. Like we have drinks now in almost 200 stores in the Midwest, and the Rekt rewards go live on that today actually. And the distributor we're working with covers 13,000 retailers in the US, right? So if we make this launch successful and it does really well, they have a really good way to pitch it to the rest of their portfolio of retailers. So, and these revenues, they're not really crypto related, right? Even the drinks we're selling without rewards, like someone's not thinking, oh, Bitcoin's down, I'm not going to go buy my 24 pack of Rekt Drinks, which I don't get rewards on anyway. The rewards are just like promotional stuff that you would get for any product. So, I think our revenues are starting to diversify away from being correlated to crypto, which is really good for us. And 10% of revenues go back towards buying back our token. And secondly, we're at this point where we've had like really good growth last year, but we're at that point where it could just go like that if this drink is successful and we get the right strategic players involved from the traditional drinks industry, where there's been a lot of interest. And I've spoken to like a lot of interesting people in the last few weeks, and I am this week, that the type of conversation where I can't really like divulge exactly what they are, but things where, there's a 20-30% chance of these things getting bigger. But if they do, then the upside is way bigger because this transforms the entire business. So I'm really not worried about crypto because I just think we have a lot going for us on drinks, on the other stuff that we have coming out. And if crypto does really well, then it's going to just fast track all of this and supercharge it massively, which will be, I'll actually be more stressed if crypto goes up. I'll be like, fuck, we have to like do all this shit now really quickly. Whereas at least now, we've got some time to do it. So.
Talking about worrying, like one thing I'm particularly interested in is you're in this very unique position. You are running a successful company, which is selling physical products, but you also are managing a token that is attached to that. Last time we had John, we did speak about the brand coin thesis. And typically, like when you're the CEO of a publicly traded company, you will have an idea of the share price, but it's not the thing that you obsess over every day. If you are running a crypto company which has no physical extension into the real world, you won't care about the physical world, and all you can look at is the chart and thinking about how to make that go up. But you're in this like middle spot because you obviously have the tokens attached to the drinks, you have the buybacks, all of those things happening. How much like attention do you spend on the token price, and how do you like balance this out for yourself so that you're not like constantly checking the chart at every time as you're running a heavily like logistic and infrastructure heavy business in the real world?
Yeah, look, I'm going to be completely honest. I am extremely focused on the token price. Like I'm not going to do what many founders say and say, oh, I don't really look at the token price and we're fucking the business stuff. It's not true. Like the fucking truth of the matter is I wake up, first thing I check is where's fucking Rekt coin. I go for a shit. I'm looking at the Rekt coin chart. I'm looking at the daily chart, the weekly chart. Like I go back from the gym, I look at the Rekt coin chart. Before I sleep, I look at the Rekt coin chart. I look at it all the time. It doesn't make me less productive because I just look at it and see the price. I literally have it on my screen here, a fucking massive Rekt chart. Like I had the daily here, I had the weekly here, I just have everything, right? So, and it's important because I think we are a community-driven project. Everyone in our community owns Rekt coin. People's morale will be affected by how well it's doing and how well it's not doing. And in times where it's not doing well, it's on me to come out there and be strong and be like, okay, fuck, like, look, I know we're down, but we're doing this, this, and this. We've got a lot coming. Like, don't panic, don't worry. Like, this is still going to be big. We're just going through this moment. And when it's doing really well, then it's like, okay, cool. Like, here's some interesting things we can do right now. So I think it's really, really important for what we're doing. Do I obsess over it? Yeah, maybe I do obsess over it, but I think that's a good thing. I think I'm channeling that obsession into how we manage communications with our community and everyone else, and how we pitch what we're trying to do to other players. So, look, it's not a situation where it's like, oh, it's down, I'm panicking, what do we do? Or it's uploads, I feel like I'm the best person in the world. It's more like it is relevant to what we're doing. It's something, if I'm not looking at it every day, well, everyone else is. So then I'm out of touch, right? I'm out of touch with what's going on. So my opinion, whether it's an NFT floor price, whether it's a liquid token, if you're an artist and your artwork, I actually think it's really fucking important, and I'm on top of it.
Makes sense. And as you say, I think a lot of people shy away from it. Well, maybe it actually became fashionable to pretend like it's not important. But then, as you say, everyone else is looking at it. So you mentioned pitching it. You mentioned pitching the coin. I remember back when maybe the market was hotter, maybe you allocated some time to like actually going out pitching the coin, but you also spoke about going out and pitching the product to people in the traditional drinks industry. How are you approaching these pitches? What kind of people are you chatting to on the investment side, on the drink side? What's exciting you about that at the moment?
Yeah, in the last few weeks, we've had some really, really, really exciting conversations on the drink side, and trying to think of a way to phrase it. It's a combination of people who would want to stock the product, people who would want to distribute the product, people who would maybe want to be a bigger part of what we're doing. And that range of people is right from like the smallest, corner shop to literally like the biggest people in the industry. And when I say the biggest people, like literally, you could probably guess within 5 guesses of like one of these people, at least two of these people, right? So, and the thing that's interesting to me is I speak a lot about going out there and pitching it to people, and I've gone out there and pitched to lots of different people, but they're all sorts of generally people I've been able to get hold of has been sort of like mid-tier, like, mid-range people. The incoming that we've had has actually ended up leading to like the biggest people, and it's been so random. It's like, someone reached out to us. I've had a lot of people reach out to us from the Real Vision stuff that I've done. We've had people reach out to us from our contact form on our website. And sometimes we're like, this has to be a scam, surely. Like, there's no way this is legit. And we're always like, okay, take the call, do it from your mobile phone, don't do it from your laptop, all the stuff. And they end up being real people. So what's interesting to me is I think our biggest leads have been from not the outgoing stuff that I've done. It's people who've just seen Rekt in the wild, if you like. And it's really a wide range of people. We spent a lot of time speaking to, really just drinks industry people, less so crypto people. And my idea and my hope is to put all that kind of like together, I think, in this quarter.
Sounds exciting. So two of the big, so you've always got the WorldStar launch today.
Yeah.
For people who don't know, this like took me back to my teenage years. Like, they're one of the biggest entertainment and hip hop communities online for ages. Like, I don't know when they started, but I remember them as a teenager, I think. And then just before that, no longer, you had the X Games partnership. So just walk people through how you made these deals happen. I'm sure it's pretty exciting partnering up with some of these like humongous brands and maybe some of your strategy for going for these particular ones?
Yeah, so WorldStar and X Games are basically our first two collaborations outside of just Web3. You know, WorldStar has like 45 million followers on Instagram, and to us, that's appealing to break outside of this Twitter bubble. And X Games is X Games, right? And we're going to be doing some stuff there in Aspen at the end of this month. So again, both of these things came to us rather than us reaching out to them, which is good, because it means people have, you know, I'm sure you can pay anyone to sponsor anything, right? And there's always a level, but when someone reaches out to you, it's like, hey, we really want you to be involved in this, it's usually a good sign. And for both of these, I think our brand really kind of matches what they do, for obvious reasons in some cases. So it's been pretty cool to have that come through. And I think for us, another goal, we obviously have also the FaZe esports stuff as well that we've done, which again is another thing outside of Web3 and pretty big in the gaming world. So the goal here is to let's break outside of crypto and start getting our product in front of other people and ultimately generating sales outside of just crypto. And that's the goal. I think the messaging outside of crypto becomes less about like, oh, hey, look at Rekt Coin, this is the best thing in the world, because, you know, crypto can be alienating to a lot of people, and some people just don't care or don't want to be involved, right? We don't want to be known as that annoying crypto company. But I genuinely do believe we have a good drinks product, and we have some even better products coming out when we have the energy stuff next month. And that's something that people want to, you know, the numbers are telling me that's something people want to consume. So the goal is to get it out there in front of other parts of the world that aren't just crypto.
Maybe a side question before Legendary asks you to share just like the WorldStar details for the launch, as we kind of wrap up here. Do you think, so you mentioned like getting out, maybe getting a bigger exposure to Instagram audiences rather than crypto. You must have seen all of the criticism of X at the moment and how it's fracturing like very old CT communities. Do you think that is happening? Are you worried for like the crypto form of communication that's been very, very centered on X? And do you think ultimately, if you want to be successful in this industry, you're going to have to go outside?
It's a good question. I'm less skeptical on crypto as everyone else. And I think these are the times you take the other side of it. And, you know, with the X thing, I don't fully understand how the algorithm works, but I think there will still be lots of people in crypto. And generally speaking, if you're a crypto person and you're following crypto people, you will still see crypto content, right? There's no point someone who's reading about like tennis seeing my content. So I don't think it's going to impact us that much so long as we're marketing to the crypto world. And to be honest with you, X is just for that. So I don't foresee an impact for us. And again, as we start to generate revenues that don't depend on crypto, it becomes less of a hit for us if it were to have an impact.
Yeah, fair enough. Going back to the WorldStar partnership, you told us how it came to be, but what do we actually need to know about the launch happening in a couple hours from now? Give our listeners, viewers, all the details for today's big launch.
Yeah, so it's going to go live at 6 o'clock Greenwich Mean Time. If you're in the US, that's 1 p.m. Eastern Time, 10 a.m. Pacific Time. And it's going to be just like all our other drops. You can head over to rekt.com, purchase drinks. I think that there's a limit of 250 units is the max you can purchase in one order. Make sure you're signed up on rewards.rekt.com. And the easiest way to make sure your rewards filter through is to use the same email address on rewards.rekt.com as you use on your Shopify website. And then everything you purchase will automatically filter through to the rewards website. We'll get all the data, etc. And then, you know, the Rekt coin and all that stuff follows after that, basically. So we have about just under 100,000 cans for sale this time, which is about half of the size of the MoonPay drop. And then this supply is available globally, primarily in the US, and then shipping will take a little bit longer if you're outside the US, if you're in the Europe, UK, Canada, etc. So I think it will go quite fast. I think that there's a myriad market out there on the 3 minute 3 minutes seems to be the over under on the sellout time.
How fast did the MoonPay sell out?
So the US stock for MoonPay sold out in like 2 minutes or something like that.
It's always the Europeans.
Yeah, the UK and European stock took 1.5 hours or something like that. But for this one, we only have one line item, so everyone's buying the same line item. If that makes sense, that it's not split between UK, Europe, and US. So if the US comes in hard again, then yeah,
they can have it all. In essence,
they could have it all. Yeah. So I don't know. We'll see. We'll see what happens. I try not to get my hopes up on these things, and I'm just happy we can sell drinks. They don't even have to sell out on the first day. It's fine. But
of course, that's awesome, man.
Yeah, quick sellouts are good.
Best of luck for it as always. Thanks so much for joining. If you want to obviously keep in touch with what Rekt Drinks are doing, you can follow along Ovi at @OSF_Rekt, or you can go to the Rekt Drinks account, which is at Rekt Drinks. The launch is coming up today in just a few hours. So take a look if you are interested. Ovi, thanks again. Thanks so much for joining, man. We appreciate it.
Cheers for having me, guys. Always a pleasure.
Great for you to be with us. Just a reminder, guys, we do this every single day, Monday to Friday, 7 a.m. Eastern time, live on X video, YouTube, and you can catch us on Apple and Spotify as well. We hope you have a wonderful day. Take care. We'll be back same time, same place tomorrow. See you later. Bye-bye.